And hello, everyone. How are you all doing today? Um, we are started trading here. I got the opening bell has gone off, and so far we are seeing an unchanged, or mostly unchanged market. Looking at the various stocks, and also looking at the ETFs, the indices. But you look at the indices, ETFs, the S&P, the Nasdaq, the SPY, the Q, the IWM, the diamonds, the SNH, XLE, the XLF, the financials, the energy, the Max 7, the, the Kathy Wood Fund. Interest rates are up a little bit today, and the major indices are very close to unchanged. The Nasdaq is up about 10 handles, give or take, 12 handles, 10 handles. The S&P is down by about 10 handles. And if you take a look at all the various stocks on my watch list, it looks like a Christmas tree of red and green. Um, One stock that sticks out right out of the gate is Bloom Energy. I sold some out of the money puts in Bloom Energy, and I sold those puts to collect some premium. I was willing to get side shares, but those puts that I sold were at the 150 strike, and now the stock is up by 11 points today, now close to 12 points today, as the stock is rising on earnings. Sandus is up. That's good. That's those. Sandus I saw was down in the pre-market. SK Hynix had earnings last night. That's the Korean uh, memory uh, maker, and it is up here, but it is down in the Korean market. So I don't know how that works exactly. But the stock had solid earnings reports, and was uh, reported strong earnings, strong revenue, but the guidance wasn't what people expected. I think today is the Fed day, so this is the second meeting with Kevin Warsh. The first meeting, he basically came out to say that he's his own man. He's going to do what he's going to do, and he is intent on controlling inflation and price stability. That he made it very clear that he's not uh, Donald Trump's sock puppet. And he, I think that I've said that he's not necessarily going to cut interest rates, but going I said it is he's not going to necessarily hike interest rates. And the narrative on the street is that he is going to hike interest rates. I think he could actually cut interest rates. Whether or not he doing that would make him Donald Trump's sock puppet, that's a different topic for debate. But I don't necessarily think he's just going to go out and hike interest rates. That all being said, that's just my opinion. I could be 100% wrong in this, easily wrong actually, because my opinion is very contrarian to the narrative on Wall Street right now. SK Hynix, SanDisk is now down on the day. It's now down $15. It was up just a couple minutes ago, and now it is down. Okay, so we got Dycom down, Callistica's down, Oracle's down a lot, Applied Materials is down, but Micron's up by $5. Western Digital's up by $9. Robinhood is up just barely. Now it's about unchanged. Nvidia is down by 99 cents to 196 a share. So, anyways, what I was saying was that I don't think that the Fed will necessarily hike interest rates. I think that actually cut interest rates eventually. That would be, I think that's going to be the first um, uh, I think it's going to be the next move that the Fed does, the first interest rate move under Kevin Warsh's new regime will be to cut interest rates. That's just my opinion. I can easily be wrong. It's a contrarian opinion to what the street is saying, because going into today's Fed meeting, at this point, looking this up right now, looking at the Fed Watch tool on the CME website. Right now, there is a 35.8% chance at this point, as we go into the Fed meeting later this afternoon. Okay, there's a 35.8% chance that the Fed is actually going to hike interest rates by 25 basis points. And what I was saying when I was texting some trader friends of mine yesterday, I don't know if I've ever seen that before. Usually when you go into a Fed meeting, the morning of the Fed meeting or the day before the Fed meeting, you're usually over 95 to 96% chance of what the Fed is going to do on the next meeting. Today, you have a 64.2% chance that they keep interest rates the same, unchanged, and a 35.8% chance that they actually hike. And the Fed meeting is 4 hours away. As I'm speaking, it's 4 hours and 20 minutes away. That's nuts. That's crazy. I don't think I've seen that before. With that big of a percentage of chance of a rate hike, or and another big percentage chance of a no rate hike, I've never seen that discrepancy where there's 35% chance of the Fed doing one thing and 64% chance of the Fed doing another thing. Usually it's 98, 99% chance of what the Fed's going to do. It's priced into the market when you only have 4 hours to go until the Fed meeting. So all that being said, because you have a new Fed chair, because you have these high probabilities of the Fed doing one thing or the other thing, my thinking is that, and as I'm speaking, we're looking at the tape action here, and we have a market that's pretty close to unchanged. Okay, and that makes sense because I think that we can have a market that is very close to unchanged, that doesn't do much throughout the entire trading day, up until the Fed announcement this afternoon. And I think after you have that Fed announcement, followed by the press conference, my thinking is that you're going to have some big moves in the market after the Fed releases its announcement on its decision on interest rates. So, with that being said, let's take a look at the expected moves for today. Okay, so let's go to SPX. I like to look at the options on the SPX the best because they are the most liquid, and they are the most, they give us the best measurement for the expected move. Right here, we look at these intraday options that expire today at 4:15 on the SPX. We look at these 0 DTE options, and we see that for the rest of the day, we have an expected move of $56. And so far, the S&Ps are only down by $12. There's not that much movement so far today. But you see here, we have an expected move of $56 for the rest of the day. So far the market is aligning with my suspicions. Okay, we're not moving much right now, about $13 or $14 up, so far. But the possibility of having an outsized move of 50 to 55 to maybe $60, one way or the other, after the Fed rate hike announcement, is pretty possible. If we look here, we look at the options, the at-the-money options that we have. We're the back of the envelope. Way of looking at the expected move is looking at the straddle, $27 plus $29, and that is 27 plus 29. That is 56, and that is what the Black-Scholes options formula says it's $56. So yeah, okay, so we can have a move up and down of about $56, and right now we're only down by $13. Okay, so that all being said, let's take a look at the NDX options. And let's see here what this says. This has a move of $334. Oh my God, help us all. But we're only moved 44, 44, now only 37, only 38, 33. So about $33 we've moved down. We're down by about $30 to $33, give or take. As I'm talking, it keeps changing. And that's not that much. It's only 0.10%. A tenth of a percent. But the possibility of a move post the Fed announcement, we're looking at some big, we could get a pretty big move here of over $334. So be prepared for the NDX to get that move on the NASDAQ futures of over 330 handles. Okay, so for you people that watch the SPY and the Qs, don't watch futures, let's take a look at, so you guys can get an idea of what we're looking at, what kind of move we're looking at after the Fed hike announcement. We're looking at a move of $6 today on the SPY, and we're down only by 0.9, 97 cents, 86 cents, 87 cents, something like that. So we're down by 70 cents, give or take, on the SPY, and with the Fed move later today, we're looking at a move of about $6. We can see there's multiple ways to look for this move. You can look at on Thinkorswim. You can look for the expected move here, there in the corner. You can also, if you don't have Thinkorswim or a platform like Tasty Trade or whatever, like E-Trade. Okay, I've been bugging these people. I keep telling them, you got to put the expected move. They're like, oh, that's such a great idea. But it's still not there. So there's lots of platforms where the people at the top don't know what they're doing. They think they know what they're doing, but they don't. But it's not that hard to do. You just put in a calculation and put it in, program it in. It does it for you, So if you don't have this expected move calculation on your trading platform, just go to the straddle, go to the at-the-money, and look at the at-the-money put and the at-the-money call. And as you see here, we have $2.63. This is how they used to do it on the trading floor before they had all this software stuff. So $2.70 plus $3 plus $3.26, 25 cents plus $3.25. $2. Wait, let me do this. $3.21. And you have $5.99. And look what you have here, $5.99. So basically, that is the expected move for the SPY. Okay, let's take a look at the Qs. See what kind of move we can get with the Fed coming up later today. We have an $8 $1.64 expected move. And so far, the Qs are down by uh, $2, but we can get an $8.64 move. As you see here, if you don't have these calculations on your trading platform, go to the strat. $4.77 plus $4.53. You got $4.60. That's exactly right where we are right here. So it's right there. So $4.60 basically, or sorry, $8.60 for the Qs. I said $4.60 because I was looking at the price of the call. But that is what we're looking for: an $8.60 move up or down on the Fed interest rate announcement. And on the Qs, we've only moved $1.50, $1.60. So there's a lot more movement possible today. Let's go back to look at these intraday charts here. This market's just been bouncing back and forth, not a lot of movement. A couple individual stocks have some nice moves today, but I'm personally not really anxious to make any big moves today. Make any big major trades today because I'm just kind of waiting for this Fed announcement. As I did mention, I have that Blue Energy put that I sold. I sold the August 7th 150 put, and those puts are now a 25 delta. They're up by 26%. I'm going to keep them for now. It may be possible. The outcome of this is that I don't get assigned those shares, which is okay. I'll just close the put, collect the premium, and move on to the next trade. Now, Micron, before we looked at the expected moves, Micron was up on the day. Now it's down on the day. SK Hynix is up by about $1.94. Like I said, it had earnings yesterday. Marvell is up by a little bit. Corning is up. It's bouncing back after a big down day yesterday. And Blue Energy is getting back a little bit of its gains, but it's still up on the day. Palantir is up by about 72 cents today. Robinhood is down by about 30 cents. You're getting some, again, this market is very sketchy right now. Lots of back and forth volatile action, lots of rotation, and that trend market that we had for quite a couple months, for quite some time, it's just not there anymore. Lots of now we have a sketchy back and forth rotation market right here. And if you're a momentum trend following type of trader, this is the type of market that just drives you crazy. You got to kind of just take a step back and not do much. But if you are a mean reversion type of trader, someone that looks for mean reversion, looks for reversals, looks for contrarian type of trades, this is a fantastic market for you right now. So the key is to know what type of trader you are, what you like. Listen, it all depends on your personality type. I found personally that people that are more optimistic are trend followers, and people that are pessimistic are contrarians. I don't know why, but it always seems to be like that's the case. And a lot of people are if they have an outside business, they're optimistic about America and the country, and they are bulls about everything in their business and so forth. But when it comes to trading, they like to do contrarian stuff. I get that. That makes sense. And they say, I only do contrarian stuff on short-term time frames because in the big long term, everything's going to be better off and be higher. So that is what I see a lot. But very often, those people are people that are contrarians, that are optimistic type of people, they're only trades on short-term time frames. Like, because they know in the back of the mind, in the long run, these are going to be good and higher. So the market's starting to reverse more. We're starting to get more of a selling as time goes on. The selling is kicking in. I don't know if this has something to do with the war in Iran. From what I understand from watching the news, or listening to the news, is that the the ceasefire that was going on for about a day or two is now over, and we have crude oil that is up by $5.60 right now, up by over 7%. Big move in crude oil, and natural gas is up. Gold is down. The market's selling off, and bombs are flying again. It's getting very, very frustrating for me. I'm getting very just sick and tired of it. It's like, gosh, like one day it's a ceasefire, the next day it's not. It's like, ugh. And I know that that's not just me. The people I talk to, and just anecdotally, people that I talk to, and friends and other traders, and that are both involved in the market and not involved in the market, they're just getting sick and tired of all this, one day on, one day off type of action with the war. Ceasefires and the bombings are back on. As far as what does the market think about what's going on? Well, I don't think stocks care about this as much as they used to, because you're not getting the reactions that we used to get. But the commodity markets, I think, still care about what's going on in our. We're getting a big reaction today in crude oil, and it's at $84.87, and let's pull up crude oil here. Let's take a look. $5 up $5.64, up over 7%, and let's take a look at the chart here for crude oil. We're getting a big move up. Look at this. So we were at close to $79 yesterday, and now we're at $84.90. It's pushing towards pushing towards $85 a barrel. So we're getting some big moves here. Basically, right back to where we were on Monday. As you see here, on Monday we were at above $85 a barrel. We're getting close to that. But it's a big move today. Two big pushes up right here. Now, again, just recently, over the past couple of hours, we've basically gone from $82 or $81.50 up to $84.87. If you want to say that's dragging down stocks right now, go ahead. I mean, that's a justified argument right now. Let's take a look at what this move in crude oil. You relate it to the move in the S&P 500. You see it's pretty inverse. You get this nice reversal here right at 6 o'clock, right as crude oil starts to move up. Take a look. Crude oil starts to really make a strong move higher right around 6 o'clock. Look at this. Boom, boom, boom. And then we go and look at the S&Ps, and you get very, it's kind of lots of back and forth. Actually, you don't have lots of movement, but then bam, look at this. You have a big aggressive down move here in the S&Ps as crude oil goes higher. So that is what is going on. Take a look at the ETFs here, and you have the only ETF here that shows a big move. It's the XLE. So energy stocks are moving up, and tech stocks are down. They're falling. Nvidia's down now $4, and Apple is up by $2. It's the only hyperscaler mega cap tech stock that is acting well right now is Apple. And the overall thesis or story right now is that they haven't spent all their money on CapEx to build out AI, and so far, that's helping them because the other hyperscalers are not seeing what the market wants to see. Is the market wants to see some evidence that they're going to get, or they're starting to get, some type of return on equity, return on investment on their investments in capex in artificial intelligence, and there are some evidence of that, but the market wants to see more concrete examples of that. They want to see the return on investment with AI, and to justify that they can continue to invest in AI going forward. Because if there's not a bona fide clear evidence of return on investment with artificial intelligence, then that argument that CapEx spending will have to come down and be reduced becomes greater in the marketplace. And another thing is that this idea that China pulls ahead and wins the race of AI, which I think is existential, that argument becomes greater if these companies can't keep spending on CapEx. So we need to see some earnings calls where they show, or some type of press release or something, where these companies show, specifically the hyperscalers, show that they're getting a return on investment from the CapEx spending in AI. And there are examples out there, specifically in like Google and Meta, where they are making money from their AI investments, but it's not like clear, like noticeable, return on investments. It's that, oh yeah, we invested in this AI, and our algorithms are showing us ways where we can better show people videos and post more efficiently. Yeah, that helps. That's where that helps them make more money from advertising dollars. But there's not like a clear cut like specific thing that people are using AI to make more money on. So there's a little bit of I guess conundrum or I guess fuzziness to it, and we just need to see like clear, like solid examples of hyperscalers making money with the AI that they have invested in. And that may not come for a while. That may come like a couple months from now or maybe a year from now. We don't know. I think it will come eventually. We just have to be patient. And when that does come, that could be the next big move in stocks. That's the landscape that we're in right now. That's what we're looking at right now. And that's why Apple is up, because they haven't been spending on AI. All the others have been spending on AI, and that's why they're down. Nvidia is bouncing back a little bit, 193.34. But as far as I'm concerned, I like the idea of sticking with artificial intelligence hardware companies, and companies that make the hardware and provide the energy to build out the AI infrastructure. There's always going to be that bear case out there, and I think that at the end of the day, after all said and done, we're in the early innings of a big hyperscaler build out and a big build out of artificial intelligence, and I think that as an individual investor, I think you're going to throughout this entire um, technology innovation wave, you're going to have lots of opportunities in various places to make a lot of money. And I think that as an individual investor, as a retail investor, don't try to catch every wiggle and jiggle, but have a big picture approach where you can find companies and you can buy shares and hold on to shares and find companies that are involved in this technology innovation that's going to go on for a long period of time. Like I said, we're at the beginning now. And don't focus on the day-to-day fluctuations. Focus on trying to find that next company that will go up 5x or 10x in a year or two. And if you find a couple of those, maybe 3 or 4 of those over the course of a 10 or 15-year period as we build out this AI, infrastructure. Because a lot of people say, "Oh, we're in late innings type of stuff." No, we're not. Okay, we haven't even started stuff like building out robots and stuff like that. This along with this whole technology innovation wave, we're going to be building out robots. We're going to go to the moon. We're going to maybe go to Mars. I'm not going to go to Mars. I'd rather die on Earth than go to Mars. But other people, human beings, and robots will be doing that. There's going to be space data centers. I mean, all types of cool stuff is going to come in this innovation technology wave that is just now beginning here in the mid 2020s. And just over the past couple years, since this innovation technology wave, since this new era has started, we have had multiple stocks go up 200, 300, 500, 1,000% in a very short period of time. And there's going to be more opportunities to find other companies like that. You just have to focus on the bigger picture of looking for the next 10 bagger. Okay? Keep your focus on looking for the next 10 bagger, and don't get bogged down by all of this minutia on a day-to-day basis. Okay, that's how I have. That's my mindset right now. Because I think there will come a day, where we could be in a bubble. We could have a big crash. Where the opportunity of making money easily in the market will not be there. And right now, that opportunity is here. And I think that, right now, when I say right now, I mean like in this, general time period. But like right now, like today, obviously the market's selling off and doesn't look too shabby, and we could easily go down further. Just as an aside, The Nasdaq is down by I think down you know down about 10% from its highs. So you know it's obviously a correction. This is a correction that we needed. So like, right now we're not making money, but I think like we could easily have another run up later. You know, in the fall. Um, but generally speaking, um, you know, keep in mind that this is a period of time that I think you can make a lot of money if you don't get caught up in the day-to-day minutia that you see on the news every day. And now the S&P is getting slammed. It's down by over 40 handles now. So the Nasdaq's close to being down close to 200 handles on the day. And the S&Ps are down close to 40 handles on the day. So there's not a lot of like opportunities right now that I'm seeing. I'm just like kind of taking a step back, not doing much today. Um, I have a doctor's appointment this afternoon, so even though the Fed's going to be having their side announcement and the market's going to be flying up or down, it's going to be making moves. I'm going to actually be at a doctor's office, so I may be tied to my phone as far as trading the Fed announcement. Um, we will find out. We will see. But um, it is what it is. I have a doctor's appointment. This guy, because I had foot surgery in March, and this guy like I was thinking I want to like reschedule so I can trade the Fed announcement. But this guy, I booked this appointment like a month ago, so I don't probably can't get another appointment the day of. If I had to change my appointment, it'll be like a month and a half or 2 months until I can get another appointment. Like this foot doctor's like a world-renowned surgeon. Like he spends like 2 day, uh, uh, 1 day every other week doing surgeries, and he's probably making like over $1 million or $2 million a year. He's that type of doctor. I was lucky that I had that he was located close by to where I live. So, anyways. And I just want to point out the weakness in the market today, as we see this big sell-off in the S&Ps here today, and then take a look at also the sell-off in the Nasdaq today. And this selling all started right around 6 to 7 o'clock this morning. And then we take a look at the Russell 2000, small caps. So this is a broad sell-off across the board. We're seeing a big sell-off also in the Russell 2000, the small caps. And then also, let's take a look at the Dow. The Dow. The Dow is getting smashed as well, from 53,000 down to 52,200. So across the board, all the major indices are getting smashed right now. We take a look at crude oil. We see right around the time when the stock indices selling starts to pick up aggressively, you get an aggressive up move in crude oil. And here we are, right around $84 to $85 a barrel. And this move is evidently on the news that the bombings in Iran are resumed. On top of that, let's take a look at this, because this jumps out to me. Let's take a look at the 10-year interest rates. You see a nice big up move in the 10-year interest rate. So inflation's expectations, interest rates are rising ahead of the Fed meeting today on the news of the resumptions of bombing in Iran. So when you see the 10-year move up the way it is, and then you see crude oil move up the way it is, both of those things together are not very bullish for stocks. And then you get the correlated selling across all the broad market indices. There is no place to hide today. There's no rotation, except for energy. The only sector that is up today that I can see is energy stocks on the back of crude oil. They are up by 2.4% today. Now, we got a nice jump in the VIX. We have not had this in a while. I've been looking to see when this would happen, but we're having a nice up move in the volatility index. And in my opinion, to get to a point where the market selling can reach some type of capitulation, some cathartic state where we find a bottom and then get another rally in the market, you need to get a pop in volatility. And so far, we have not had that. Another thing I like to look at is, it's not on this watch list, but it's on this one. And this is the volatility of volatility. I want to see the volatility of volatility really pick up to get to where we can get some type of washout and some type of bottom in the market. And the VVIX, the volatility of volatility, tracks that panic buying of VIX calls, and right here above 100 at 102, that shows that the fear is picking up, and the aggressive nature of market participants hedging by buying VIX calls is picking up, but you don't get that crescendo type of feedback loop where selling begins more selling type of thing until the VVIX gets above 110. So we're still not at that point where we're getting like lots of panic selling above 110, but we're it's starting to pick up here at 101, 102 on the VVIX. So we are seeing more panic selling today and more put buying and more call buying on the VIX, more hedging today, as the sell-off is correlated today, and there is not much rotation going on today, other than Apple being up. Google is flat on the day, and Walmart is flat. Uh, Palantir is up a bit, and then XLE and OIH are up. So energy stocks are up today. But for the most part, everything's getting sold. I mean, even you know, there's not much buying happening. Reddit's up by 3% today, and even Bloom Energy is back to being. That was a stock that had earnings yesterday, and was up by a good amount. It's now down on the day, so it gave back all its gains from early this morning, and it's now down. So you're just getting a lot of selling across the board, with the exception of a couple areas, a couple individual stocks, and a couple sectors like energy and Apple and Eli Lilly's up a little bit. Visa, MasterCard are up a little bit today, but just barely. But for the most part, you're getting selling across the board. As we see here, Bloom Energy gap up, move off the opening print on earnings, on positive earnings, and now it is now red on the day. So we are just some sloppy, disappointing tape action for the bulls, and Bitcoin's up today. That's interesting. But I think with interest rates up and crude oil up the way they are, it's really dragging down the general market. Now, Kevin Warsh can very easily change that today, or he can exacerbate it. We can get a big move down, especially if he raises interest rates. So stay tuned, everyone. Stay tuned. Keep an eye on everything. The selling is picking up, and as I said, the VIX is starting to pop, starting to move up more aggressively, and the VVIX is also moving up. So they're buying protection on the volatility index, and they're buying puts on the S&P 500. They want that protection right now, and most everything is getting sold, with a couple of exceptions. And even Apple, I mean, it was up a lot more earlier today. Now it's only up 73 cents, and it could be easily unchanged and in the red very soon. And Nvidia's down to 191. It's getting slammed. There's a lot of aggressive selling. Micron is down by 35 points now to 785, well below the 800 level, which is the key level for Micron. So we'll see if the selling picks up and gets more aggressive, or do we have a huge rally after Kevin Warsh speaks later today. But I do think that we're going to get more big moves after the Fed meeting today. That's my prediction. See if I'm right. we're getting a nice bounce here, everyone. Take a look at the NASDAQ intraday chart here. We're getting a nice bounce on the NASDAQ here, and we're getting, let's take a look at the S&P future contracts. So we're getting a bounce here in the S&P, but the bounce in the NASDAQ is much more prevalent at this point. So we're getting a nice bounce here. I also want to point out today, aside from the Fed coming out with the interest rate announcement later today, we do have the big hyperscalers coming out with earnings. Coming up, we have Microsoft coming out with earnings later tonight, and we also have Meta. It is coming out with earnings later tonight. So let's take a look at the expected move for these stocks here. So we have Meta with an expected move going into earnings with the expected move is $47 up or down. And we're going to take a look at Meta. It has an expected move going into tonight of $27. We also have Amazon and Apple coming out with earnings later this week. So let's take a look at Amazon and Apple for their expected moves for the rest of this week. So for this week we have an expected move with Amazon of $17, going out 2 days, $60. So we have for Amazon an expected move of $16 to $17 going into earnings. And Apple, Apple, we have an expected move for this week of about $13. So one thing I think is what this market wants to hear is this market wants to hear, and we have the hyperscalers coming out with earnings. We have, as I just said, we have Microsoft, Meta, and later this week, Apple and Amazon. So we have 4 hyperscalers coming out with earnings this week. And I think what the market wants to hear is a more concrete, more defined, more specific reasoning or story of how these companies are making money, getting a return on investment from AI. And so if we get some type of concrete, bona fide, real reason, way of how these hyperscalers are making money from their AI investment this week, and we have 4 hyperscalers coming out this week. As I said, Microsoft, Meta, Apple, and Amazon. That could be a clear bullish signal for tech. Another thing that I've been noodling on is how we can get a rotation, another rotation within a rotation. So on the next move higher, what we have had over the past couple months, if you look at the chip stocks like Micron and Western Digital and so forth, I'm going to take a look at Micron's chart here. Everybody knows that as you see, it's selling off again today. Everybody knows that Micron has had such a huge move to the upside, such a big move to the upside. One of the key tenets of the markets is markets alternate between range expansion and range contraction. Range expansion and range contraction. And Micron has had, it went through a period earlier this year of range contraction within its big uptrend. Okay, it had its range expansion, then it had a period of range contraction, then a range expansion, and now it's selling off and going through a period of correction, going into range contraction. I think that this broader period of range contraction, I think you could go in and buy some Micron right here, but you have to understand that it may continue to go sideways and not just go right back to ripping up higher. It may go through a period of sideways contraction, sideways consolidation, as Micron is now gone through that period of range expansion. It is now, as it corrects, entering that period of range contraction. So even if it bottoms here, maybe it goes down a little lower, goes down maybe towards 700, it will go into that, it will bounce back and go higher, but it won't just go back up like it was before. It may go through a period of back and forth sideways consolidation within a range contraction type of market before it makes another big move higher. Now, all that said, we look at other chip stocks, like the big kahuna, NVIDIA. Okay. Now, NVIDIA, for many, many, many months, has basically done nothing. Here it is at 192, and basically has done nothing for a long period of time. And we actually have to zoom out and go on a higher time frame just to show periods of range contraction and range expansion. And as you see here, going all the way back to 2022, you see where NVIDIA has had periods of range contraction, sideways corrective action, and then range expansion, range contraction, range expansion. And after this range expansion, you had a long period of range contraction, and then you had a period of range expansion, and now we're in range contraction. I actually think that what you could see here is money come out of the memory chip stocks and then go back into a stock like NVIDIA. As it's had a prolonged period of sideways consolidation, it is now ready to make another move up higher. And so there's an argument that it is possible that money goes into the software stocks. It could happen. I think it could happen. But I think it's more likely that money go from one area of hardware to another area of hardware, back into NVIDIA. And I think it's also possible that you could see money move back into like Palantir. You know, as Palantir is a premium AI software company, and it had a huge multiple to the upside, and it needed to consolidate and has some pause. It's had that over the past couple of months since it peaked in late October. It's had multiple months of sideways consolidation. You can see the money move back into Palantir, back into NVIDIA, in kind of a combination of moving into software and some new, different AI hardware companies, and then come and continue to come out of the memory stocks like Micron. And you can see a period where Micron lags the market for a couple months. That money moves back into NVIDIA, Palantir, and maybe stocks like Microsoft. Okay, it has had a big correction. It is ready for a move. And because right now, money can also move into Amazon. I think Amazon's had a consolidation period and is ready to make another move. It already kind of started to make another move. It had a nice move earlier this year, because at a pullback it can have another move up. We see money that has recently moved into Apple. It's had a huge move recently. So it's interesting to follow all these rotations in the market. As as this market rotates basically around from one stock to another, one sector to another. So I can see maybe Apple sell it off a little bit upcoming, and then that money moves into NVIDIA and Palantir, and you see the microns continue to lag. They may get a big. What you could see in micron is kind of like a period of where the stock rallies back to 1,000, and then comes back down to 900, and maybe bounces a little there, and then goes back to 800, and then back to 900, and you'll have a longer period of time of multiple months where basically micron doesn't do anything, and that may last into next year. I think it's because we've had such a huge move in a stock like Micron. It's very plausible to see a stock like Micron basically do nothing for the rest of the year. All that said, I do think it's okay to buy the stock here under 800, but you have to have that long-term outlook and have that long-term bullish thesis on the innovation technology cycle of artificial intelligence. But you have to have a longer-term outlook. If you have a shorter-term trader type of outlook, you have to keep up with the rotations. And I think, buying Micron here is only good for a trade for it to only go to like 1,000. And if it gets to 1,000, above 1,000, sell it, and be ready for the stock to sell off towards 900 as it forms a sideways consolidation pattern that can go on for multiple months. With all that said, I am going to go back to looking at the markets. That's it for now.